Okay. Welcome, welcome. We're gonna give it a second here for people to come in. Uh, Andy, how's your day going so far?
Man, doing well. And in full transparency, wife bought some new furniture. Been a long time coming, and so I woke up this morning with the task of helping her rearrange for the delivery. So up
Nice.
early.
I stayed up last night and I made the mistake, but I need to see it. I stayed up to watch the election results because
Yep.
I'm a thrower for political drama. I don't
Right.
want to see where it goes. So I'm realizing like, wow, this is crazy. And I realized like, oh, it's 1:30 in the morning. I
Yeah,
probably should go to bed.
I did not make it, man. I'll be honest with you. I was out at probably 10 o'clock, and I was like, I'll check Twitter at 1:30, and I did. I got up at like 1:30, and I was like, yep, went to bed.
Okay, cool. I know.
Yep.
Wow, that's surprising. Okay, great.
Yep.
Moving on.
Yep.
Um, I also was laughing too because it always feels like I think our audience will resonate with this. Like election years, life starts day after the election cycle in a lot of cases.
Hmm.
Like I'm seeing a lot of back to you business as usual activity all of a sudden just coming out of nowhere all over social media, my
Yep.
inbox. It's like, okay, we all can breathe, we got through it, and we're
Yep.
moving on to the next part of our lives.
Yeah, no, I mean, everybody's kind of been talking through, I don't know if you say clenched teeth or, whatever, a little bit of, just kind of see how things are going to go. And I mean, I think there is a kind of a collective sigh the next day. I'm one of those people that, I mean, it's business as usual, man. Like I didn't, I mean, I didn't, really expect, either way, regardless of the outcome, I didn't really expect my daily due to be affected just a ton. And I know that there's a lot of people that aren't in that scenario, and I have empathy for those folks. But
Sure.
as far as me individually, like it's just get up, go to work, and keep trudging along.
Well, let's go ahead and dive into today's topic then. Hopefully,
Yeah,
people will
man.
be joining in. I see we
Yep.
have a couple people in the audience. Welcome, John. We're also going to be sharing for those of you watching the recording. We're going to be
Right.
posting this out and living it up for about the next week or so. So if you weren't able to attend in person, hopefully you're watching the recording. We're going to be talking about cyber insurance. Andy, why don't you go ahead and kind of introduce your bona fides on who you are in
Yep.
regard to this topic and where your qualifications are.
Yeah, no, I'm Andy Runyon, partner risk advisor at Fifth Wall Solutions, and Fifth Wall is the oldest and largest single cyber insurance solo broker in the country. We're a wholesale specialist, and me personally, I've been doing cyber insurance for just over a half decade now, which heading into year six doesn't sound like a lot of time, but that's like a lifetime in cyber insurance. This risk and this line of insurance has not been around super long. And what I spend my days doing is primarily I work with managed service providers, MSSPs, compliance groups, IT brokers, anybody that's in the tech space, and helping them understand cyber insurance for their clients, and then tech errors and emissions insurance for themselves.
Absolutely. And Andy, we've worked together now for I think a little over a year. You've
Right.
been great on this. Let me go ahead and do a quick introduction for anybody who's in the audience that doesn't know who I am. My name is Logan Edmonds. I'm on the other side of this equation. So I'm the CEO and Chief Security Officer at a MSP managed service provider called TTS. We do cybersecurity for small and medium-sized businesses, especially in the avenues of, hey, how do you manage your risk, both proactively and, in from Andy's case, working with partners like Andy on the reactively, because the
Right.
end of the day, cyber risk is bottom line risk. Everybody's got to calculate it, and everybody's got to have a plan to manage it. It's just how good is your plan? That's where we come in and kind of help you tighten that up. Um, I think we're good for introductions. So let's
Yep.
start off with the big header. You mentioned this. 6 years is like a lifetime in cyber insurance,
Yeah.
right, Andy?
Yeah.
The
Yeah.
title of
No,
today's
big.
thing is, oh, go ahead. Go ahead.
No, I was saying big changes. I mean, I came in, back in 2018, 2019, and back then in those days, in order to get cyber insurance, it was a single page app, name, address, web address, revenue. How many employees do you have? Have you had a loss in the last couple of years? And you don't happen to be in the marijuana or casino or adult film industry. Like, I mean, like literally, like that was it. And if everything was good, then here's your quote, and it's $1,000 for $1 million in coverage.
And it
And
was a blank check, basically. Like that million
uh,
covered
and
everything.
it ended up being really, really poor for the insurers, right? COVID happened. Of course, nobody knew that that was coming, but that downshift from Fortune 1000 to Main Street with cybercrime made a lot of these policies pay out. Insurance companies some of them operated at 114, 120% loss ratio.
We're going to talk about it. You're skipping ahead. But yeah,
Yeah,
we're going to
yeah.
talk
No, I
about
mean
that.
I won't spoil the future,
No,
but man, it forced people to look a lot more into the controls and the underwriting.
yeah, and that's why the title of today's thing is the state of it in 2024. Because from my perspective, I think you agree with this. It literally is changing year to year. Like this thing is still an evolving coverage in terms of what it's shaping up to be, what the underwriting standards are. I mean, I see new things being added yearly from my perspective. As someone who, hey, clients come to me and says, hey, look, I need you to help me fill out this application warranty, and it's like, wow, that's a new requirement. I haven't seen that one before. I'm seeing it constantly. Is that in terms of not changing month to month, but yearly, it seems to be they're tightening that down and getting a better understanding of these are the kind of controls we want to see in the environment before we insure people. Is that fair from your perspective?
No, 100%. I mean, it started with MFA, and then the next thing that came in after MFA was EDR. It was the thing that nobody at the business level knew about, and then all of a sudden they were talking about, and then now it's things like PAM, Privileged Access Management, MDR. I mean, it's constantly evolving, and I would almost say definitely year by year we're almost getting to the point to where it's almost half year by half year. I mean, like we're starting to see things come in mid year from
Yeah,
an underwriting standpoint.
I would say history is important here too. Like any insurance coverage, what I've seen is a
Yep.
more pressing emphasis on have you had a breach, right? Like that is a
Yep.
big thing I've been
Yep.
seeing is they want to see your story. Everyone knows this picture, and I know it too, right? What happens when you get a ticket on your car insurance? You keep getting tickets.
Right.
Your premiums go up, right? They don't want to
Right.
write you. You end up
Yeah.
going through some weird brokerage in the Caribbean,
Sure.
right? Like, no, I'm
Sure.
just making that joke. That's a reference to the Big Bang Theory for any of you nerds in
Right.
the audience. But yeah, no. Like that everybody understands that. It seems like to me, cyber insurance is just maturing into a model of where it needs to be to make the carriers a viable business model, which is
Right.
great, right? Like I want cyber insurance. Let's
Right.
talk about worst case scenario first and kind of what it is and what it's not, because I know there's a lot
Right.
of fear mongering on this next slide, which was the whole travelers snafu.
Yep.
There was a big famous case between travelers and a firm called ICS where travelers said, we're not paying because you lied to us on your application, and they
Right.
won that in court, and everybody took that and said, oh, cyber insurance doesn't pay. And
Right.
that, from my reading, and I think yours too, that is absolutely not what happened here. And
No.
so let's talk about this court case and in a few seconds or less. What happened here? Why did travelers deny? And kind of what are the lessons to be learned from this in like a 2 minute synopsis from your perspective?
Yeah, basically at the highest level, everybody has an application or what in the insurance world is called an attestation, right? So you go out and you say, do you have these controls in place? And the problem on the insurance side is it has been largely binary yes, no in the background, right? So do you have MFA? Yes or no? Well, what if we have it on certain parts of the environment, but others we
Sure.
don't,
It's
right?
it's on my server, but not my email, for example. And the emails
There
got
you
hacked.
There you
Yeah.
go. But I'm presented with the binary yes, no. So I say yes because I do have it in some form. Well,
Yeah.
then a breach happens and forensics show up and they go, oh, well, the entry point didn't have MFA on it. And you said that you did have MFA on your app. We're not paying out because you misattested or you lied on your application, right? So I mean, that has been the boogeyman in the channel now for over 2 years, 3 years now, right? Is that, oh, insurance doesn't pay because you didn't have the right controls in place. It's not because you didn't have the right controls in place. It's because on your application, you stated things that were not true. And that's any insurance, right?
Yeah.
I mean, going back to auto insurance, if I say, that I haven't had any wrecks or if I hadn't had a DWI in the past, and then it comes to light and I get another one, right? I'm gonna get canceled, right? So,
Sure. Yeah.
that's
I get
really any
caught. I
insurance.
get caught downing a pint of vodka and then wreck into a police cruiser. Like no one's gonna
There you
want to
go.
insure me in that sense. Like I'm just grossly
Exactly.
negligent.
Exactly.
My daughter and I, kids' cartoons are getting real, man. There's a show called The Big City Greens, and we were watching
Yes.
it. And that's
Yeah.
literally the first
My
episode. It was
kids
like
watch it.
Grandma
Yeah.
drives into a police cruiser, and I was like, "Wow, this is like a 6-year-old show." Okay, we're getting real
Yep.
here.
Yep. For sure.
Look, I think this is sort of a no-brainer, but one of the questions I get asked a lot is, "Do I even need this insurance?"
Right.
The answer is a resounding yes. You
Yep.
do need cyber insurance, and I would say if you are in business in any way, shape, or form in 2024, you have some kind of digital presence, and you need to insure yourself for that. Because just in the last year, we're seeing stats of upwards of 53% of small to medium-sized businesses were hit by some form of cyber attack. 1 in 2. Like, and that's a 48% increase from the year before. Like, it is exponentially rising year by year.
Right.
AI, automation, there's so much tools out there that hackers are using and criminals are using to really just expand their reach with little to no effort. And this is the stat that really makes me, it bothers me as a professional because it's true. I see it, which is if you're not insured and you get breached, which is the worst case scenario, you've been hacked, someone's stolen significant money from you, they've ransomed your environment, they've stolen money from one of your customers, all those scenarios that are worst case scenarios. When you don't have insurance, one and two just never really fully recover. It
Right.
actually significantly impacts their business in a long term effect. So, this insurance, in my mind, 100% accurate. You need to have it. Anything for you to add on that?
Yeah, I mean, I would say that we still occasionally hear this whole idea of, oh, I have insurance, so I don't need MSP or I don't need cybersecurity services, right? Or certain controls, or hey, I've invested in these controls and I don't need insurance, right? It's not an either or thing, it's an and
Mhm.
thing, right?
Yeah.
You should mitigate your risk, right? And reduce your risk, but it is impossible to fully eliminate that risk. And because it's impossible to fully eliminate, you need to transfer some
Hey,
of it over to insurance, right?
we're gonna talk about that too because I
Yep.
got a whole spiel on that. But
Yep.
let me talk about this too. The last thing is if you're in business in 2024 or you have partnerships in
Mm.
2024,
Yep.
I do a lot of compliance work. I do a lot of
Yep.
contracts like, hey, what do we need to have? And this line item shows up literally everywhere. Do you
Yep.
have cyber insurance? You have to have at least $1 million in coverage, or we just won't do business with you. That comes up
Yep.
all the time. And honestly, I'm seeing it bleed into regulations now too. You're
Yep.
seeing more and more of financial institutions.
Yep.
CMMC 2.0 just dropped. I believe there's a requirement in there that if you're a
Yep.
sub vendor, you got to carry insurance for that. Like the government stepping in and saying, "Hey, this coverage, it's like general liability. It's like we all understand we all got to carry general liability if someone slips and breaks their neck on our premises. Like that's
Mhm.
just not being grossly negligent. We're getting there
Yep.
with cyber insurance. That's what I see. You
Yep.
agree?
No, and it's funny. I was on stage with CISA back 3 years ago, and our regional director for CISA down here in the South. I'm an Arkansan. He was like, "Man, I don't see it right now, but by like 2025, 2026, I think we're going to see banking. I think we're going to see government require people to have cyber insurance." He was dead on. I mean, it's
Yeah.
it's
It's a fiduciary
100%.
responsibility. They want to make
Yep.
sure that if you wound somebody, you have the resources to make that person whole. Like I
Yep.
get it. Like it's becoming that level.
Yep.
And this you mentioned this before, but regular
Hmm.
business policies.
Yep.
My understanding here, and again, asterisk, not an insurance professional or licensed agent. That's why I got you on this call. My
Right.
understanding is, in an ideal world, it would make a lot of sense for cyber to be put right into an E&O policy or a business
Mhm.
policy. But in practice, that's just not really happening effectively, and we're seeing more and more that good cyber coverage tends to be a standalone policy more often than not. Is that
Yep.
true? Is that what you're seeing?
100%. And I don't want to deter anybody. I mean, listen, something's better than nothing, definitely, right?
Mhm.
But where something can get kind of hairy and get really, ugly, and we talked about the boogeyman earlier, cyber insurance doesn't pay out. Part of where some of that trope or idea comes from, right, are these BOP add-ons or these business
Mhm.
owner add-on policies, right? Most of them have lower limits. They have sub limits within those limits, and then they have exclusions of coverage, right? My first thought is always had a client or a friend that one of his employees wired $65,000 to a bad actor on an invoice manipulation scam, right? Filed his insurance, insurance paid out 5 grand. He was like, cyber insurance is a scam. No, your policy did exactly what it said it was going to do. It had five
Yeah.
thousand dollars of crime coverage from the jump. So be very, very, very careful with adding cyber onto a business owner policy.
I saw a BOP not too long ago, and again,
Hmm.
this is why I have you on the call. But I looked at this and said this doesn't make sense. It was for $500,000 of coverage. The person
Yep.
underwritten paid like $300 a year, but
Yep.
right in the text was crime is excluded from this coverage.
Yep.
Which, when you think the logic through that, right? Like
Yep.
it's like what kind of cyber damages don't originate from crime? Like more
From
often than
crime,
not,
right?
right? Like
Right.
like it feels like this is just a giant get out of jail free
Yep.
card, and that's why the policy was priced the way it was. Is
Yeah.
that
And
fairly
that's, I
accurate
mean,
to say?
yes, and generally speaking, right? You pay for what you get in the cyber insurance world. I mean, if you've got $500,000 of coverage and you're only paying $300 for it, that should tell you something. The other problem is, and I don't want to skip this, we see this regularly, is folks come to us with 50, 60, 100 million in revenue and $500,000 of cyber insurance. So there's a whole different conversation about quantification of risk and understanding your risk. It's directly tied to revenue, right? Like if you go down for the average of 15 days and you're doing 100 million in revenue, gorilla math's not hard there. I mean, that's roughly $500,000. I mean,
From,
that's
from the IR side, like the
yep,
incident response side, from
yep,
the guy who's actually going in cleaning up environments, I've never seen a small business breach. And again, that word breach, we'll talk about that later on what that means. But a
yep,
breach where there actually was damages, I've never seen it be less than when everything's calculated up at least six figures. And this is
yep,
businesses of like 5 to 7 people. Like this
yep.
stuff gets expensive.
Yep. And that's what I mean. In the example that I just used, I was just talking about business income revenue. I wasn't talking about rep harm. I wasn't talking about the payment of the ransom or fines and penalties or anything else that could bleed out. The wild thing, Sophos released a report this summer, and in their report they showed they it was like 4,000 businesses. In the $0 to $10 million revenue bracket, the average all-in loss was $1.2 million.
I believe it. And people
Yeah.
look at me like I have a third head when I tell them about these
Right.
costs. Because like, how can
Right.
that be? I don't think people, I know I do, and I've been caught on my own fallacy. They underestimate how much their digital lives are intertwined with their financial and business well-being. Like
Correct.
it's like a spider's web. It literally
Yep.
touches everywhere, and it's hard to see where everything's at.
That's
And
right.
I think carriers realize this because we're going to talk about this. You mentioned this before. In
Yep.
2016, the average carrier loss ratio for cyber insurance was hovering around, according to my stats, around 67%, which is pretty
Yep.
decent for a professional line of insurance, right? Like
Not
that's
bad.
pretty good. And then
Not bad.
2020 happened and it shot up to, like you said, 114, 115, 120%. For every dollar that they're taking in premium, they're spending a dollar, like a dollar 20, right? Like that
Right.
doesn't work. The business
Right.
model broke. And that's where a lot of people come and say to me and say, what changed and why does it keep changing? It's that insurance is a business at the end of the day. It has to have a viability in the model. And if the model's broken, either you fix the model or you go out of business. And these
Right.
carriers aren't going to go out of business. Like I get it. Um, and it works. Like I would say what they're doing and what your carriers are doing is working well because they raise premiums to somewhere that's probably a little more appropriate for the kind of risk they're entertaining.
Mm-hmm.
They did get more specific on their coverages. It wasn't a blank check anymore. They said we'll cover this, 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 and
Right.
this, not
Right.
this. And they tightened their underwriting standards, like you said, right? Like they got a little more less about check boxes and more about, hey, what kind of controls are in the environment? What kind of risk are we taking on and agreeing to cover? And is it undue? And it, in my opinion, it worked. Premiums went up, coverages went down, and in terms of like the overall what they would cover, and it got probably more mature where it needs to be, and it worked because their profitability shot up about 45%. Like the
Correct.
business is solid again. It
Right.
isn't cyber the fastest growing professional line of insurance right now? Isn't that the case?
100%. And that's why I'm
Yeah,
sitting in this chair. I was a
yeah,
generalist when I started,
yeah.
and I saw the stats, and I operate in a market where there's just not a lot of education, right? And I thought for the longest time I was just some weirdo down here in the South that was running around helping people in Arkansas, Mississippi, Tennessee, and Missouri. And then next thing I know, I meet the fifth wall guys and was like, oh, this is a problem nationwide. It's not just in the South, right?
Yep. And so we're going to pause after these next couple slides for Q&A because this is a Q&A session and we're already halfway through our time. So if you guys have any questions in the meanwhile that are coming up as we talk, feel free to hit up the Q&A box on this chat. We will stop and answer them. This is an interactive session. But for to wrap up the point where people type their questions if they have any, what do the market changes mean, right? What does that mean for people trying to get insurance? There is more premium. You're going to spend more money than you did 5 years ago. Sorry, not sorry.
Yep.
I think my premium 5x in the last in terms of 2019 versus now. That's fair.
Right.
The
Right.
coverages you can get, there is more strings attached. I can't. It's really hard for me to afford. For example, if I get $1 million policy and I want $1 million in financial fraud coverage instead of the standard $250,000 I keep getting offered for my policies. That gets really expensive. That gets
Yep.
really expensive to try to get that. So I don't get that anymore. I get the $250,000 for financial fraud. And
Right.
you're my agent, so you know this.
Right.
It used to be really easy when you get insurance. Now I have to have a couple phone calls with you and really
Yep.
sit there and think of when I'm filling this stuff out. Like, hey, am I being honest here? Like, it's a more intense experience to get the insurance renewed every year.
Yep. And the maturation has been is that certain controls are now tied to certain coverages. That was not the case before, right? Like if you're a regular business and you don't have multi-factor authentication, your ransom payment coverage is probably gonna drop, right? Like because there's really good statistics out there that roughly 80 to 85% of ransom events were originated on an account that didn't have MFA. So guess what? Insurance is going, you don't have MFA, we're not going to pay as much on your ransom claim, right? You
I was
don't have
seeing
security awareness training, we're going to knock off some of your crime coverages because you're more likely to wire money to a bad guy, right? Like that's been the maturation of it.
I've also seen, hey, if you're being negligent about your controls, for example, because like you said, there's a granularity in controls. This year, one of the ones I've seen in some Chubb policies from my perspective is, hey, there's some vulnerability language now. If you have vulnerabilities that were used to hack an environment that are more
Yep.
than 90 days old and you didn't patch
Yep.
them, we're going to start
Yep.
lowering your coverage because you should have been on top of that.
Yep.
If it was 6 months and it was an update's been available for 6 months and that caused it, instead of $1 million, you get $500,000, right? Like
Yep.
they're doing these granularity things to kind of reward people, in my opinion, that are actually on top of their controls, but also to limit the risk for the bad actors, right? The people who aren't really caring, right? They're just saying, hey, insurance, you're a blank check for me. You take care of it. Like that's not how this works anymore.
And if that critical patching strategy, just to dig into that real quickly, if that critical patching strategy is not there, there's a chance you don't get a quote, right? Like that's one of our front end questions. It's one of the key ones is how often do you patch? And if it's outside of a month and there's no set strategy, there's a chance you may not even get insurance.
And I will say this, and I think I'm fair to say this doesn't matter if you're in the cloud or not. Like
Correct.
The endpoints themselves, the terminals that you use have to be patched because they are a vehicle to accessing cloud data. A lot of people say, well, I'm in the cloud, so it doesn't matter. No, that's not how this works at all. Like you have to put updates on the computer you use to access your cloud platforms. That's just how this works.
Right. And in the event that the cloud data is breached, guess who's liable for the placement of that data and the intake of that data?
That would be you, because you signed terms and conditions when you signed up for the service.
Exactly.
That's exactly the case. So, I mean, here's the takeaway here, and this is my thing. If you're trying to get coverage for the first time, it's a little harder, more than a little harder. You have to go through the gambit of your first time coverage. And if you have a history after you get coverage, so you have to make a claim, renewal becomes more of a beast, and it's harder to get the best rate. Okay, hang on a second. John Ferguson posted in here, and this is a great question. Do I understand correctly you're recommending a supplemental cyber insurance policy for churches? If so, can you give a ballpark of how many you'd recommend for a church budget, or recommend a church budget for that coverage at a certain size? For example, how much per million of income? Yeah, well, first off, yes, John. I would say I will, from my perspective, and Andy, you can speak. If you're a church, you should have cyber. Nonprofits are being targeted out the wazoo because there's so many hands in the pot. Go ahead, though.
No, it's a great question, John. Thank you for asking. We deal with a lot of nonprofits and churches at Fifth Wall, and the biggest thing why we want them to have a separate policy. One of the most common sublimits and exclusions on a regular insurance policy, if it does have cyber, is the crime piece. Logan mentioned this earlier, right? What is the number one threat to nonprofits and churches as far as cyber breaches go? It's not ransomware. It is 100% the crime, right? It's the theft of funds. It is wire fraud. It is impersonating the church and say, hey, give through this link now, right? And then members, give through a false link, right? All of those are related to crime coverages, and absolutely. As far as the limits and how much you should purchase, it really depends on the revenue. As the revenue climbs, the exposure does as well, right? So, we consider $1 million policy to be the baseline, right? Once a entity goes above 5 million in revenue, we really encourage them to start looking at 2 million or more. I mean, again, go back to my previous comment. 0 to 10 in revenue, 0 to 10 million in revenue. Average was 1.2 million in loss if you do have a ransomware event, right? And we still are seeing those at the nonprofit and church level. So anyway,
we saw a church in our experience here. I'll talk personally. I saw a church that pulled in about $750,000 a year in giving, and they were hit with a financial fraud of over $125,000 in a single incident, right? Like it is disproportionately directed because, especially with nonprofits, in my experience, there's so many volunteers and good-hearted people that help with various important business functions of the church. There's a lot of room there for what I call social engineering, getting into people and helping them make mistakes to get financial access. It's just, that's where I see a lot.
The good news is to that, and John, to speak directly to like pricing, and I don't promise premium, but what I can tell you is that at Fifth Wall, for our average small business of less than 10 million in revenue, the average annual cyber insurance premium is right around $4,000. I mean, and it depends on sector, it depends on controls, things like that. But you're talking about less than $400 a month to get $1 million of coverage and solid crime coverage. It's not some exorbitant amount.
No, and in my experience, the exorbitant amounts are bigger businesses or people with a history, which all makes sense. Like if you keep getting claims, you're going to have a higher premium.
That's it.
Okay. Um, this is my thing, and this is what I'm going to take over here because diligence, right? Like, there's two
Hmm.
parts to risk management. There's the reactive portion, which is what we're talking right now, cyber insurance. It's great. Something happened to me, and I need to be made whole after the event. You do need to have a plan for them. That's where cyber insurance stands up and does an amazing job. But you need a plan before that because a lot of people don't realize this, Andy, and it makes sense the moment I say it out loud. But when you make a cyber claim, you don't get a check in the mail the next day.
Nope.
It takes anywhere between 60 to 120 days sometimes for the claim to be processed, authorized, gone through forensics, gone through the underwriting process, the breach coach, and then actually be deposited in your account. So you've got to float that difference in a while. So having diligence about, okay, something happens. How do I plan for it? How do I make sure that A, I minimize the blast radius so I can keep running my business, my nonprofit, but B, make sure that the claim process goes as smooth as possible. I am dotting my I's and crossing my T's. So when the carrier comes to me and asks me for evidence of, hey, I did all this stuff, I can just pass over a nice little binder and say, yep, here's all the evidence you're asking for. What else do you need from me? I don't want to be the one holding up the claim process. That's what my take is for now is what's needed from the people who are getting insurance. Is that fair to say?
No, 100% it is. And I mean, talking about insurance doing its job properly and sometimes taking longer to pay out. Think about like a reputational harm claim, right? The window of coverage for reputational harm. Let's think about a ransomware event, right? And I'll throw it back on you. Let's say I'm an MSP, right?
Yay!
And I have a breach, right? And I'm down for, let's say, 10 days, right? You think that's going to damage my reputation? Yeah, of course it is, right? Like, I mean, absolutely, I would have folks that would potentially turn back and blow back on me, right? Insurance will cover out to an appropriate reputational harm policy would cover out to 6 months, right? So you could be, I mean, 180 days into this thing and still have the potential to make a claim, right?
Yeah.
So, yeah,
And
having your ducks in a row, having money set aside, all that stuff is important.
one thing you educated me on this, and I
Hmm.
think it's important to say, is the average cyber claim. We're not seeing, one claim per incident. We're
That's right.
seeing if there's a breach, it's usually a
Correct.
series of claims. I think you said it was around like the average is 9 claims per a breach, and somewhere in that area, ballpark area. Is
For
that is
for a
that fair?
ransomware, if I wouldn't go that for a ransomware event, you're
Okay.
probably looking at about six on average.
Okay. Okay. So you're making multiple claims, and it's taking time to figure out what the
Right.
claim's even going to be about. So that's another reason why you're not going to get a check the next day because you don't even know what you're asking for the insurance to reimburse you for, right? Like you don't know
That's
that,
right.
and the thing.
That's
So
right.
what kind of I talked about standards, and I'm just going to go through them real quick. What kind of stuff do you actually have to do? And I see occasionally they're on these warranties. This is just a quick list of usually what I see come up in these warranties, right? Things that I want a quick checklist showing A, I do them, and B, I can show proof that I'm doing them. Yeah. For example, we got to have a firewall. Don't use the Spectrum modem or the Comcast modem. Like put an actual firewall in your environment.
Yep.
Show that you have MFA on all your key systems, email, servers, key software as a service platforms like Dropbox or QuickBooks, stuff like that. Make sure your people aren't emailing driver's licenses all over the place. If you're an insurance business, don't email copies of driver's licenses. Just
Right.
don't do it. Backups. Hey, we can show that there's a good backup, and if we're ransomed, we can have the business up and running in a couple days. Worst case scenario. Hey, we have a plan if we're ransomed that we all relatively know and we can follow instead of just trying to figure it out and wing it on the go. User training, passwords, and of course, risk assessments. I do see that a lot, which is some sort of control of, hey, are you actually critically looking at the kind of risk your organization is entertaining and kind of having that discussion internally to make sure where your controls are at is where you need to be. Anything to add to this list?
No, but just understand that like some things are going to be more key as far as premium than others, particularly multi-factor authentication, guys. I know nobody wants to do it. I know it's a pain in the neck, but if you don't have MFA, you're going to pay potentially 40 to 60% more on your premium. So, some things are more key than others, and also too on the backups. From our standpoint, we really like daily and immutable. If they're daily and they're immutable, that's good in the insurance world.
Yeah, I think a lot of people struggle because small businesses don't have this in-house expertise typically. Like that's
Yep.
just not where they're designed for. Big businesses, they got an IT department, right?
Right.
Small businesses, you might not even have an IT guy. You might have some guy you call up on Facebook once a quarter and say, "Hey, my
Right.
printer's not working again." I see that all the time. Like it's still a thing. I kind of question it because it's 2024. I'm like, how are you still there? But no, it's still a thing. And so first of all, in my opinion, you got to figure out where your risk realistically is, and that depends on your business, that depends on your revenue, it depends on what kind of data you're handling, and this is where I like risk assessments. I
Yep.
really do. It's not just a lot of people have a low opinion of risk assessments that it creates problems. No, it's just identifying problems that already existed and giving you a path of, okay, now you know what they are and you can quantify it. You can now put controls in place to eliminate or reduce these risks. Um, Bringing on a third party to do a risk assessment in your environment to figure out where you even start, it's not that expensive, guys. I think a lot of people have heard like a penetration test, right? A penetration test can run you like $50,000. That's not what we're talking about here. They just assume like it's out
Right.
of my budget. Risk
Right.
assessment, I'm doing small businesses of 15 people for $1,000, right? Like that. This is something you can do. Hang on a second. We have a new question here. Sorry, John just asked the question, so I'm going to pause here for a second. If we're ransom, the bad guys are demanding 500K, and we have this insurance. Can you talk us through the process in order to be covered, assuming we had met the underwriting standards? Do we pay the 500K and file a claim and hope it's covered? I'm wondering how that works because of the long time it takes to file a claim. That's a great question. Go ahead, Andy.
No,
This is all
that's
you.
no, it's yeah, no, it's great. So the way that it works in the event of a ransomware event, like if you have a $500,000 demand, you actually make the claim. You don't pay it yet, right? Like hang on, and immediately talk to your insurance provider. One of the great things about insurance is they have certified and professional ransom negotiators that are part of what you have purchased, right? And they will unleash forensics. They will get those negotiators in touch that help you go, because a lot of times the demand's in Bitcoin. It's not in U.S. dollars, right? Like all of those things. You may be speaking to a Russian, right? You may be talking, their negotiation may be going on in a different language, right? So you would notify your insurance company that you have been hacked, right? Notify them that you have a ransom demand. Let them begin, and they would start the process there. And what we know is that in the average scenario, like if the initial ransom demand is 500K, and they deploy forensics and negotiator and things like that, they can kind of help you get an idea of what the bad actor actually has, and then leverage that with them in the negotiation. We see that demand most times is cut nearly in half, right? So it wouldn't be uncommon to see a $500,000 demand be reduced to a $200,000 to $250,000 payout.
I think we're talking where John's getting stuck at, and this is a fair thing to explain a little better, is we mentioned before 60, 90, 120 days.
Oh yeah,
Bringing
yeah,
some
yeah.
time sensitive.
Yep.
Your mileage may vary, and it depends on the kind of coverages you have, right? Like some parts of the policy, like Andy's describing, might pay out really quick. Other parts
Immediately.
take a
Yes.
long time.
That's it.
One of the ones I find that takes a while, from my experience on the subjective side, is financial fraud, right? Like
Yep.
there was wire impersonation. Someone took money out of a bank account they shouldn't. Well, the insurance company's got to do its due diligence, make sure it was actually an illicit transaction. That can take 30, 45, 60 days for they reimburse you and make you whole, versus ransomware where time is of the essence.
Yep. No, 100%. And I mean, it does depend on the details there, right? And again, if you're looking at business income, you've got to verify financials. If there's a 15-day loss, you got to go back in and look at revenue. So that may take longer. Reputational harm may take longer. If it's a deal where it's a ransom payment and that payment needs to be paid immediately, the insurance company will help you with that process, and you can be indemnified immediately on that.
Okay, well, we're actually a little over time, so I want to wrap
Yep.
things up here just to keep
Yep.
people respectful of time. Here's my take. I don't like self-risk assessments, and some people will swear by them, some people won't. Here's my personal subjective part, and I'm going to be on my soapbox for 30 seconds. When you assess your own risk, you tend to have emotional blinders. And what I mean by that is you have a very subjective view that's biased in certain areas because it's your business, it's your nonprofit, right? Having a third party like a doctor, for example, it's like going to a doctor's office. I don't diagnose myself when I'm having an issue. Everybody knows the fallacy of going down WebMD. Don't do it. Right? Just go to your general practitioner, have them do a workup, and just tell you straight. I'm a big believer that self-assessment's not a great idea because it often creates more problems than it helps. Bringing in a qualified third party to do that risk assessment we talked about for a reasonable price, and then just getting that general checkup, that bill of goods, saying here's the problems we see, here's some recommendations, here's the plan on how you can get them. Let us know if you want more help. That's what I like to see more because it helps organizations streamline this and actually get to the meat of the matter. I would say the action plan for 2024, if you haven't done it already and you're on this call, you need to get the right coverage. you need to get the right price. Don't and make sure the price is not too little, not too much. Like you said before, too little is almost as bad as too much.
100%.
But also read the fine print, understand and work with a qualified agent that can actually properly advise you on this kind of policy, what your coverages entail and what they don't. Andy, I know you guys at Fifth Wall are our preferred provider. For those of you guys on this call today, we're going to go ahead and offer 2 special offers. So first and foremost, I know I just said don't do self-assessment, but a lot of people aren't ready to go and make that jump to going straight for the third party. If you're in that place, you're like, I'm not sure I need this assessment. I do have a self-assessment you can take to start with. If you go to ttscyber.net, again, that's ttscyber.net. I'm going to put that in the chat. You can find a free 10-minute checklist assessment that gives you a quick checklist of the common controls that we expect to see in a modern environment that more often than not are going to show up on insurance warranties from our perspective. ttscyber.net. We're also offering a very special thing. We have a partnership with Andy here. We don't make any money, TTS of Andy. We just like the Fifth Wall guys. I think they're great advisors. They know what they're doing on cyber. If you need a hookup with a qualified cyber insurance agent, reach out today, respond to this invite. We'll be sending out a thing on after this. We can get you plugged in with Andy. And Andy actually just put the link in the chat, fifthwallsolutions.com/discovery. These are our 2 offers today. Whether you want to talk about proactive control management or just getting the right insurance and working your way backwards, we got you covered. Andy, thank you, man, for giving me your time. This is always fun. We do this every few months, and I always have a blast with you. Any final thoughts before we wrap up for the day?
Man, appreciate you having us on, and I think your assessment there is spot on. You can pay too little, you can pay too much. The biggest thing is finding that sweet spot of a policy that not only fits the budget, right, but it also covers the exposure. And that's probably the biggest thing I see missing in the industry right now is people have no idea what their exposure is, right? They go out, they get $1 million policy because it checks a box for a contract, or because they got $1 million of GL and they got $1 million of business auto and they got $1 million of work comp. So I'm going to go get $1 million of cyber. Find somebody that can help you quantify that risk, right?
Yeah.
And that's the key thing moving forward.
A great example of this, and I'll end on this note, is ransomware. We talk about that. Depending on your kind of business, you have a different vulnerability to ransomware. Some businesses don't have a lot of susceptibility to the fallout of ransomware. There's some, but it's not nearly as much as others. What they do have more susceptibility to is the reputational harm component, right? Like they get hacked and the hackers take a bunch of PII or go brag on the internet that they hacked this person, right? And then the customers get a little squeamish. And what I see is these policies are written, wow, you got a ton of ransomware coverage, but there's no reputational harm in here. This doesn't make sense for your business. It should be the other way around. And that's the kind of stuff you're talking about.
Yep. 100%, man. Know the fine print. And like you said, man, I pitch it back to you. I appreciate you having me on. Always enjoy these chats. I learn something just about every time that I get on, and enjoy getting this knowledge out there.
All right. Well, thank you, everybody. I'm going to stop sharing here. Have a great rest of your day. And don't hesitate to reach out. Again, ttscyber.net and Fifth Wall Solution. One more time. Sorry, Andy. fifthwallsolutions.com /discovery.
/discovery. That's it.
Got you. Thanks, man.
See you guys.